What's going on, everybody? Julian here, J. Lewis Trading, doing a recap video for you guys slash a video lesson. I'm going to be sending this one out to everybody because I think this is a topic that is of the utmost importance that everybody understands. And the topic of this video is really about admitting when you're wrong and understanding when is an appropriate time to take a loss and what to do moving forward when you're experiencing losses and a losing streak. So we're going to start off over here with WPM. So this is a trade that I was in to the short side, and essentially this broke down and created a bear flag on this 15-minute chart. And my expectation here was that price action was going to snap down here and continue to drop into the lower 40s, maybe even into the high 30s. This was a derivative-based trade. And what evidently happened is that this thing rallied against me, so I had to get out. Okay, so I manually stopped myself out of the trade. WPM was a recorded loss, had to get out. Another one that I was in that I had to get out was MU. Same thing. This thing was breaking down through its 200-day simple moving average, started to really move in my direction, and then bounced and moved straight up about 5 points. During that 5-point move against me, I had to take this off. I had to realize and recognize that I'm wrong. The trade is not working out, and I have to get out of the trade. Another one is EYES. This was another one that I was in, and this one actually didn't go against me. This one I was actually waiting for, but you can see that it's consolidating and it's not moving yet. So the timing here was off, but the trade itself was still very much alive and healthy. But I didn't want to wait, and the reason being is I admitted to myself that the timing was off, the same way I admitted to myself that the two other trades that I put on were working against me. There were a few more, but these are three of the most recent ones that I wanted to talk about. And so I took this trade off today, and again, I was down on this marginally. I was down probably a little bit more than what the commissions to trade the stock was. So I wasn't down very, very much, and what I wanted to do here is I wanted to roll into something that was actually turning a profit, and this is where LUV steps in. So Southwest, this is today's chart, and this was actually producing a very, very beautiful setup for me, and I wanted to get short this stock. And so essentially what I did was I was peeling back all of the trades that were not working, and this one was already on. I had a relatively small position, and right through here we saw some resistance at the 200-day simple moving average. Price action then stepped down, took out 50.49, and then it started to sell off. As it started to sell off and it rallied and confirmed that level, prior support, now resistance, what I started to do here was I started to add to the position with my losing trades. And so what I essentially was doing was I was taking the losers and I was rolling all of that capital forward into something that was actually working. So I went through my P&L and I looked at everything that was not working, and then I looked at what was working, and I started to take positions off. I even had another stock that was up substantially, and I took that position off and I rolled it into this. So I'm sort of compounding the profits. At this particular moment, at the close, I think I'm up about 20% intraday on LUV, and the way that this is looking is that it is setting up to step down tomorrow as well. So I got to say that I'm pretty okay with all of the losses that I took, because the fact of the matter is when price action finds itself down, 125 basis points lower down to this 48.50 level, rough numbers, this is going to pay for every single one of those losses and then some. And so this is why it's really important to not only understand technical analysis, but it's also important to understand your P&L and really be able to dig in and say, this is not working. I need to take it off because the capital is better suited working over here with something that is working. And so with this, I essentially pyramided into the trade. I built a position, and I built a position on the back of positions that weren't working. So yes, there was a loss that was realized on a few different stocks and the derivatives that I was trading, but I simply rolled it forward. And if I'm right on this, which technically it looks like I will be, this will really work out, do very well, and all of a sudden all of those losses that I realized on paper are now up in terms of rolling that capital over into LUV. So the whole premise of this video is to understand when something is not working, take the trade off, and if you have something that's working, then build a larger position. Because if something's working, you should be putting more capital to work in that situation that is working, and if something is not working, take that off. Hope some of this helps. If you have any questions, Julian at jlewisTrading.com.